Hello everyone, welcome back to Financial News in Palos Heights. I'm Ron Jankowski with Channel 4, my co-host Paul Munico from Ameriprise Financial. And Paul's going to give us an update as to what took place last week. And Paul, I have some current information that Ameriprise had sent this morning, and I'll let you take it.
Thanks, Ron. I'm going to focus on, we know that the Fed raised interest rates just recently here, and I'm going to focus a little bit on the next Federal Open Market Committee policy meeting. And that decision is scheduled for November 2nd. Now, the Fed policy is likely to play in the background to incoming economic data over coming weeks and starting next month. We should get the Q3 22 earnings season in gear. Now, obviously, updates on inflation and employment trends will influence asset prices and upcoming rate decisions. However, as according to FactSet, 7 of 11 S&P 500 sectors are expected to post earnings per share growth in the third quarter below a year ago. Now, for the S&P 500 as a whole, Q3 2022 earnings per share growth is expected to rise just 3.5% year over year. That's down from the 6.3% pace seen in Q2 and the 10.2% growth reached in Q1. Now, notably, energy played an outsized role in driving overall EPS growth in Q2. Excluding the energy sector, S&P 500 EPS actually declined in Q2 by 3.9% year over year. Bottom line earnings growth has been slowing all year and is likely to slow further in Q3, with an increasing number of industries posting negative year-over-year earnings per share comparisons in Q3. Simply, stock prices follow earnings growth trends over time, and while current equity prices already reflect some expectation of slowing growth dynamics, we expect more economically sensitive sectors to see continued pressure as activity slows. Importantly, we believe analysts' earnings forecasts are too favorable for the front half of 2023, which could cause headwinds for stock prices if analysts adjust their forecasts lower during the Q3 earnings season.
And this morning, Paul, the Ameriprise had sent the following. The U.S. stock futures are near sessions low, and basically after the stocks finished 4.5% last week.
It's looking like the downtrend from last week is at least going to continue on, as indicated by those futures, but the futures aren't how the market closes. So
not necessarily, right. And markets in Asia are broadly lower, but Japan, the standout, losing 2.7%. Europe mostly lower at midday, but off to sessions lows.
Yeah, not a great sign that the world economy or the world markets seem to be declining.
Treasury yields continue to move higher, with the 2-year at 4.27% and the 10-year pushing up against 3.80%.
Higher rates could slow the economy in terms of borrowing costs and mortgage lending costs, and that's kind of by design.
Exactly. And you mentioned that the Feds are meeting November 2nd for another review, so there's probably going to be another adjustment upward.
Could be.
Forex volatility remains high, with the sterling continuing to hit new lows versus the U.S. dollar. The WTI crude continues to slide down a 0.7%. That's good. Hopefully we can get it down even further. Gold is down 0.5%, and Bitcoin futures are up 0.3%. I know you love Bitcoin. You just love it.
Don't follow it.
I know.
I know of it.
I'm kidding. I'm kidding. I don't want to have anything to do with it, but that's beside the point. Stay with us. Paul will be back with our show called Your Money. He has an excellent topic to share with you. Stay with us. We'll be right back. And thank you for staying with us on our show called Your Money. Paul's going to talk about financial planning. That's his expertise. Paul, I'll let you take it.
Thanks, Ron. You know, little changes, they can make a big difference in your financial life. And mastering your finances and having a healthy relationship with money isn't always easy. In fact, it's far from it. But a few small adjustments in your day-to-day life can meaningfully accelerate progress towards your financial goals, no matter how modest or ambitious those goals may be. It all starts with a commitment to spending carefully, saving diligently, and investing wisely. Consistency in your investment strategy and minor enhancements to your investments can make a big difference over time. Now, how a little bit can add up, let's take a look. Can you find an extra $100 per month to set aside towards your retirement? That comes down to just $3.30 per day. If you did that consistently, earning a 7% average annual return, that modest amount could add up to more than $51,000 in 20 years. Approximately $117,600 in 30 years, and more than $248,500 in 40 years. The longer you accumulate that small daily amount, the more significant the results. Now, can you bump up the extra savings to just $5 a day or $150 a month? If so, that total after 40 years would climb to more than $372,800. And let's say, for example, you were able to generate not a 7%, but an 8% average annual return instead of that 7. This small increase would grow your $150 monthly contribution to a whopping total of $486,270 after 40 years. Now, in these examples, no fees or taxes are assumed in the hypothetical calculations. Small steps to help strengthen your financial foundation. Things to consider: you should make it a priority to identify sources of money that can be added to your long-term investments. So here are some simple ideas on where to find extra money for your retirement plans and other savings needs. 1, be more cognizant of purchases that you might make for granted today. Maybe cut back on meals out or treating yourself to whatever catches your eye while shopping. Think about capitalizing on sale prices when buying groceries or other everyday staples, and stick to your shopping list as much as possible to avoid splurging on unforeseen splurges. Be sure to boost your retirement savings every time you get a pay raise, and try to grow your retirement plan contributions yearly to keep pace with inflation. Make sure you fully capitalize on employer matches, if offered, through your workplace retirement plan. Determine if there are ways to restructure any debts you carry to reduce interest costs and potentially lower monthly payments. Then invest that difference. If time and your lifestyle allow for it, consider taking on a side job that can generate extra income that you can put towards your retirement savings. Now, if you are 50 or older, take advantage of the catch-up contribution provisions in the tax law to be able to boost your retirement savings beyond the standard maximum amounts. Now is the time to save. The sooner you can start saving more for retirement, the greater your opportunity to build more wealth. Now is the time to start searching for more ways to save while talking to your financial advisor about how most effectively to put that money to work for you.
And Paul, if there's a question out there, should they and can they call you?
Absolutely. They can call me directly at 708-226-3412.
And for Paul Munichel with Ameriprise Financial and myself, Ron Jankowski with Channel 4, we wish you good investment day.